Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. And yes, we are back with the three amigos. How you doing, Dion?
I'm doing great. I'm trying to recover because you had me growling like the Witcher between these takes.
The Witcher? Oh my God. What the hell is that?
Exactly.
Hell? And Matt, how are you?
I'm just bridging gaps between you two. That's what I'm doing. I'm bridging gaps.
There you go. You are the master of that. Hey, all three of us are content creators. Together, we probably put out 50 videos a week. We probably have hundreds of comments combined. And I don't know if you guys have noticed this, but in the last 7 days, certainly the last 5 days, people are getting a little crabby, a little cranky, a little negative, a little frustrated. I wanted to ask you, is it just me or are you guys seeing this? We'll go to Matt first.
I was cranky. It'd been 6 days since I put something under.
You haven't got a deal. You're starting to shake.
I was like, give me a deal. Get something in front of me. I can see. I think that people are becoming more testy. They're digging their heels in more. The crisis guys are circling, the carcasses in the sky, because they believe that it's really coming. And the funny thing is that, it's like crypto. Hey, take that crypto, fold it in half and shove it, because it's not looked so good the last few days. So again, it's just one of those things where it's like, this is a long-term strategy. That's why I don't sweat when this happens or that happens, because it's housing. If it starts to tick down, sweet, I'm going to buy more stuff. If it starts to tick up, I tell you what I'm most excited about. I'm actually really excited and really pumped because I'm locked in on 9 refinances, 30-year fixed at 4%. So 1.75, what? So I'm digging it. So yeah, I think that people have gotten a lot more cranky, and I just suggest if you want a different result in 22, that you do something different than what you did in 21.
Yeah. How about you, Dan? You're out there. You're also in Bigger Pockets. You're a featured presenter all the time. So what are you seeing out there?
So I think Matt nailed it, and only the nerds are going to get this. But Yoda says, when you go in the cave, you find what you bring with you. And Matt said he's been cranky because of whatever the reason. He's going to find cranky. And the way you cover your information, Matt, is you're going to challenge people. You're going to call people out. So people will bring you things so that you can challenge them and call them out. I'm maybe filtering out a lot of that because my goal is to help educate. And so when I look at my comments or my feedback, I'm looking for the people who are also educating. I like it when a comment pops up and says, that's a great point. Here's how it worked for me. And I pick up something out of that comment that I didn't even include in the video. And I was like, that's a great point. I file it away too. So the crash videos are frustrating. The I can't buy a property because I can't find something that meets the 1% rule is frustrating. When people say, if prices drop, I'll buy it on sale. I agree with Matt. That's not a bad strategy. I think that works in stocks, crypto, real estate, anything. And I get with crypto, we've seen a massive loss in the last week, but 7 or 8 months from now, are people going to care? You have to look at it over a long enough timeline. It could triple. Real estate over a long enough timeline is going to go up. The thing that bothers me when somebody says, I'm going to wait to buy until the prices come down. And then they make a quote like, interest rates are going to go up. That's going to cause prices to come down. But rates went up. Your cost is going to either be the same or go up. So you're waiting to give more money to the lender instead of to the seller. But no, I don't think I'm running into a lot of more negativity now than last year. I mean, even Neil I always get his name wrong. McElroy.
Ken McElroy.
Ken. Yeah. Why did I say Neil? He had, over a year and a half ago, he was calling for a 40% crash. His last few videos have been, this is why it's the time to buy.
Yeah.
I haven't heard him come out and say, I said 40% crash, I was wrong. But he has turned around to say, it's growing strong, prices are going up, rents are going up.
Yeah.
You'll see his pretty mug on a thumbnail on my channel soon enough.
Yeah. Hey, Ken, how you doing, buddy? Yeah. So I think there's a couple of things going on. And again, I have the luxury of, I do a daily show, as you both know. That activity that leads to that show is something I've done for 30 years. It's not new. The only thing I do different is I take notes on a sheet of paper and I talk to a camera. I always did that reading every day for 30 years. So why do I bring that up? Well, I told people what's going to happen. I told people what the Fed meeting minutes were going to be like on Sunday. They're going to be more aggressive. We're going to find out who's the most hawkish. We're going to find out how many of them are. Don't believe this whole 3 rate rise nonsense, because that's what they're telling you for the press. The meeting minutes, it tells you how freaking scared they are. And they are scared, right? I told you it was coming. Now, what does this mean? There are a lot of new investors, and it's no secret that Robinhood and all these other free trading platforms, we have more retail investors even than the dot-com crash. We had 2 years where we had to stay home. We sent out all this stimmy checks, and people were turning thousands into 10,000s and hundreds of thousands, and everybody was easy. Everybody was smarter than Warren Buffett. Yeah, I was there once before too. And then the market turned and I wasn't ready. And eventually the casino won. What we are now experiencing is the unraveling of that. So again, as somebody who saw $7,000 turn into 200, turn into 40, I know how that slope feels. People are going to get cranky. Oh, my AMC or my GameStop or my Robinhood or my Tesla or my whatever. I'm going to hold. I'm going to hodl. I'm going to hold. Well, you're going to have some dead money. I know people that were dead money in Cisco for 12 years. Dead money is opportunity cost. But yeah, you don't recognize a loss till you sell. Well, mathematically, that's true. But there's this thing called opportunity cost. The other thing is people are going to have to get a job. There's a lot of people who have had swelling stock portfolios, swelling real estate, that if they didn't rejuggle or rebalance their portfolio, like Ray Dalio says, every year, rebalance. If you don't, and you stay highly leveraged to tech stocks who make no money and have 120 times revenue, not earnings, you're going to get smashed. All that is happening right now. Some people are going to sell and limp. Others are going to hold longer and get more pain. And people are going to get cranky. People don't like admitting mistakes. It's a big party when everybody's making money. People will get very nasty and very angry as they lose money. And again, I follow the consumer. I have told everyone, you guys have heard me. I think everybody partied in Q4. They bought a lot of stuff. The first half's going to be slow. Now we have the Fed raising rates. We are having stagflation, whether you like it or not. Mm-hmm. The first half of the year is here. It sucks. However, if you've watched our channel, you got ready. You did a bunch of refinances. You did some cash out. Now you have dry powder, because there are some freaking morons out there who are over their skis, didn't listen, now have to sell assets to make up margin calls or fund their life. This happens all the time. And with all the retail traders that came in, I got to tell you, there's pain's coming. So that's what I think. And I feel bad for him, but hey, I told you this was coming for 6 to 9 months. A lot of you didn't want to listen, and a lot of you were nasty to me. All right. Sorry. So
enjoy reality.
Yeah.
It's going to be a lot of fun Mike, it feels a ton like 06, 07.
Yeah. Brian Lebo, the Vegas guy.
I know Brian. Yeah, he's great.
So we talked about the .com and the coins, and like, hey, coins only one more letter. I thought that was pretty funny. It's just like .com. It's just now 4 letters versus 3. It's crazy. Sorry.
Well, what's unfortunate is the investors that invest short term. They're thinking within a year or two, if I do make these plays, I can get this amount of money. Because look what happened to crypto at one point, or look what happened to these stocks, and then their margin gets called, or they're timing crypto wrong. And so in their mind, investing sucks.
Yes.
They're not looking at, I bought long-term buy and hold rental properties where the housing crash in 2009 and 2010, those investors did really well because there were more renters, which increased demand. So that increased rents. There are asset classes that they don't perform. I'm not going to get a 300% return on my money this year. I'm just not.
No.
It's possible somebody can do that in crypto. It's entirely possible.
You can also win a lot, perhaps. Yeah.
But there is a almost certainty that I'm going to get a 10 to 20%. My overall leverage portfolio now performs at about a 20% return.
Yes.
Because as you own rentals, rents go up, mortgages stay the same, or you refinance to half the rate you bought the place at, and now your cash flow goes up.
Yeah.
It's a long game.
It's a long game. Yeah. So the other thing that I want people to realize, you don't know if this is going to happen, but the last time, this is what happened. People got smashed in the stock market. Companies that couldn't fail, failed, went bankrupt. And what happened, at least in the Valley, is a lot of people stopped investing in the stock market, just like I did, and they went somewhere else. And by the way, single family rentals, that's kind of where this all started last time. So it's going to be interesting to watch. I unfortunately think we have pain. I think the Fed is not your friend. I think we have rising interest rates. Again, we've been telling people for a year this is coming. It's just here. So it feels good to be right, but I also know there's a bunch of people having pain today, so that doesn't feel good. So Dion, any closing thoughts, and how can people find you?
The thing that sucks is crash videos get views. So the people that are here that are listening, thinking, get in the game, do the work, put in the effort, learn your market, make those offers, get that long-term rental. The numbers are just much smaller than the total number of people out there that are going to be hurt by watching the scare and the fear videos and sitting on the sidelines. That's my closing thought. And you can find me right here on YouTube, Dion Talk Financial Freedom. My live streams are Tuesday afternoons, 4 p.m. I stay until the questions stop coming in.
You guys are amazing. How about you, Matt?
No time better than today than to start doing the work to have an alternative to what your current strategy is. Yeah. There's no better time to start than now. Mr. and Mrs. Lumberjack, we'll talk about that tonight on our live stream, 8 p.m. Eastern time. Lumberjack Landlord on YouTube.
Very cool. Thanks, guys.
Thanks, Mike.